Welcome back to our channel. Today, we're diving into the exciting world of cryptocurrency trading. In particular, we'll be exploring the ins and outs of how does Bitcoin trading work. If you've ever wondered how Bitcoin trading works, you've come to the right place. So, let's get started. 1. Understanding Bitcoin trading basics. Host. Before we delve into the specifics, let's establish a foundational understanding of Bitcoin trading. Bitcoin is a digital currency that operates on a decentralized network known as the blockchain. The process of trading Bitcoin involves buying and selling this digital currency with the aim of making a profit. But how does it all work? Let's find out. 2. The role of exchanges. Host. Bitcoin trading primarily takes place on specialized online platforms called cryptocurrency exchanges. These exchanges act as intermediaries, connecting buyers and sellers, and facilitating the trading process. When you sign up for an exchange, you create an account that allows you to deposit funds and start trading. 3. Setting up your trading account. Host. To begin Bitcoin trading, you'll typically need to complete a verification process on the exchange. This ensures compliance with regulations and helps secure your account. Once verified, you can deposit funds into your account, usually through bank transfers or other accepted payment methods. 4. Placing buy and sell orders. Host. Now that you have funds in your trading account, you can place buy and sell orders. A buy order allows you to acquire Bitcoin at a specific price, while a sell order lets you sell your Bitcoin for a chosen price. These orders can be market orders, executed at the current market price, or limit orders, where you set a specific price at which you want the trade to execute. 5. Order matching and execution. Host. Once you place a buy or sell order, the exchange matches your order with other traders looking to buy or sell at the same price. When a match is found, the trade is executed, and the Bitcoin is either bought or sold accordingly. The exchange acts as an intermediary, ensuring a smooth and secure transaction. 6. Monitoring and analyzing the market. Host. Successful Bitcoin trading requires careful monitoring of the market. Traders use various tools and indicators to analyze price charts, track trends, and make informed decisions. Technical analysis, fundamental analysis, and market sentiment play crucial roles in determining the right time to buy or sell Bitcoin. 7. Managing risks and setting stop-loss orders. Host. Risk management is an essential aspect of Bitcoin trading. To protect against potential losses, traders often set stop-loss orders. A stop-loss order automatically sells your Bitcoin if its price reaches a predetermined level. This helps limit potential losses and manage risks effectively. 8. Exiting trades and profit-taking. Host. Once your trade has reached your desired profit level, or if you want to cut your losses, you can exit the trade by placing a sell order. This allows you to convert your Bitcoin back into your desired currency and lock in your profits. Remember, timing your exit is crucial for maximizing gains. 9. Types of Bitcoin trading. Host. Bitcoin trading offers various approaches to suit different trading preferences. Let's explore a few popular types of Bitcoin trading strategies. Day trading. Day traders aim to profit from short-term price fluctuations by entering and exiting trades within a single day. They closely monitor the market, make quick decisions, and capitalize on intraday price movements. Swing trading. Swing traders hold positions for a few days to weeks, taking advantage of medium-term price trends. They analyze price patterns and indicators to identify favorable entry and exit points, aiming to capture larger price swings. Scalping. Scalpers focus on making multiple small trades within a short period. They aim to profit from small price differentials by quickly entering and exiting positions. Scalping requires precision and efficient execution. Long-term investing. Some traders adopt a long-term investment strategy, holding Bitcoin for an extended period. They believe in the long-term growth potential of Bitcoin and aim to benefit from its increasing value over time. Segment 10. Factors influencing Bitcoin trading. Host. Several factors impact Bitcoin's price and, consequently, Bitcoin trading. Let's look at a few influential factors. Market demand. The overall demand for Bitcoin affects its price. Increased demand typically drives prices up, while decreased demand can lead to price declines. Regulatory developments, government regulations and policies related to cryptocurrencies can significantly impact Bitcoin's value. Positive or negative regulatory news can cause price volatility. Global economic factors, economic events and trends, such as inflation, economic instability, or geopolitical events, can influence Bitcoin's price. Traders often analyze macroeconomic indicators to anticipate market movements. Investor sentiment, market sentiment, including investor confidence and market psychology, plays a crucial role in Bitcoin trading. Positive news or widespread adoption can boost sentiment, while negative events may lead to market uncertainty. 11. Leverage trading and margin trading. In addition to traditional trading, some platforms offer leverage trading or margin trading options. These tools allow traders to borrow funds to increase their trading positions. However, it's important to note that leverage trading involves higher risks, as losses can exceed the initial investment. 12. Security measures for Bitcoin trading. Security is paramount when it comes to Bitcoin trading. Here are a few essential security measures to keep in mind. 2-factor authentication. 2FA. Enable 2FA on your exchange account to add an extra layer of security. This typically involves entering a verification code from your mobile device along with your login credentials. Cold storage wallets. Consider using cold storage wallets, offline devices specifically designed to store Bitcoin securely. They are less susceptible to hacking attempts compared to online wallets. Research and due diligence. Before choosing a cryptocurrency exchange, conduct thorough research. Look for platforms with a strong reputation, robust security features, and a transparent track record. Keep software updated. Regularly update your trading platform, wallet software, and devices to ensure you have the latest security patches and features. 13. Learning resources for Bitcoin trading. Learning about Bitcoin trading is an ongoing process. Here are some valuable resources to enhance your knowledge. 1. Online courses. Enroll in reputable online courses or educational platforms that offer in-depth lessons on Bitcoin trading strategies, technical analysis, and risk management. 2. Books and ebooks. Explore books written by experienced traders and industry experts. They can provide valuable insights and practical guidance. 3. Webinars and conferences. Attend webinars or cryptocurrency conferences where experts share their knowledge and experiences. These events can help you stay updated with the latest trends and strategies. 4. Online communities. Join online communities and forums dedicated, and there you have it, a comprehensive guide on how Bitcoin trading works. We've explored the basics of Bitcoin trading. The role of exchanges, placing buy and sell orders, monitoring the market, managing risks, and exiting trades. Remember, Bitcoin trading involves risks, so always do thorough research and start with small investments. Thanks for watching, and be sure to subscribe for more exciting cryptocurrency content. See you next time.